All right, folks, I'm going to quickly go over this. So basically, you had this rally. First of all, this is the copper market. Copper market, 25 tick Renko on the left-hand side and 4 tick Renko on the right-hand side. All right, so you had basically this breakout right here where it says BO. Let me just delete all this and redo it so you see what I'm doing here. Over here, you have the breakout, big green. Big green means what? A lot of volume. A lot of volume where? Upside. How much volume? 11. 11 what? 11 times 1,000. 11,000 contracts right here with follow through. What do you want to do now? You want to take a look at what happens on the retest, whether these guys are going to continue buying. And when it goes down, they're not there. So you have 11,000. I mean, there's 4,000 here. That means there's some buying, but not enough. And then, it basically goes down. And the breakout does not hold. Excuse me. So a lot of times when the breakout doesn't hold, what does it mean? You got to take a look at the low. The low is right here. So if the breakout don't hold, where's the secondary support after the breakout? The secondary support under the breakout here is the low, where either first step is to defend breakout. Second is to defend trend. Here they try to defend breakout, can't do it. Why? Not enough volume. So go lower to defend to the low, where they'll see if they can defend trend. At that point, you have this bar of 8, and I'm going to show what happened. This is where it gets interesting. So over here, the market is going up, 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 and they're selling. How do I know they're selling? You can see this brick right here, 38. That's 3,800 contracts. 3,800 contracts, that's a lot, and it's the biggest in at least 100 bricks. That's how much volume that one brick has. So what's going on here? Selling the highs. That is what's going on here. Someone is selling the highs. How do you know it has follow through? It's selling, and that selling has follow through, which means, yeah, it's able to push the market. As it goes down, it goes down. There's some effort here, but it's just effort on the way up, which is selling on the way up as demand tries to come in to defend the low, defend support levels. There's some demand, but they just get sold into. And then you have that breakout, and you have a continued rally, breakout, boom, and then right here, yeah, you have oversold condition. How do you know? All the other waves are 3s and 4s and 2s, and this one is 1, 2, 3, 4, 5, 6, 7, 8, 9. And has the biggest volume in 49 waves, as well as the biggest distance in 30 waves. That tells you that, and it's nine bricks. So it's obviously oversold, but you don't know, because after that, if it could pull back and you could have more selling. So what do you see after that? You have a nice up wave right here, which is bigger than the last 9 waves, and then you have a secondary test. That secondary test has less distance, and obviously if it had less distance, it also has less volume. So after that, still doesn't mean jack. What is meaningful is when it rallies to the resistance area and it tries to go down and tries to go down and it can't go down. Here you create the springboard. This is the springboard. This right here, after the climax, that secondary test, and then here as it's hugging and unable to go lower, that is your springboard. After that, you have this is a massive amount of volume relative to this trend. This is 55,500 contracts right there, and it goes higher. You have your breakout right here on the 55 and the 41. It goes higher and makes a higher high. At this point, I have no doubt in my mind that this market is in an uptrend. After it creates a springboard base, has breakouts, and has a higher high, market is confirmed to be in an uptrend relative to its trend and time frame, or in this case, its brick size. It's going up. All right, so that's how the turn happened. The climax, secondary test, springboard, breakout, heavy volume on the way up, biggest in 49 up waves with a higher high confirmed. All right, so now it's just a matter of what happens here. This gets very interesting because they absorb the breakout to the downside, this breakout right here, and they pierce the high. Now, what happens when you pierce the high? When you pierce the high like that and are unable to follow through, that means there's no breakout buyers. So the breakout buyers here against this high are not there. What happens when the market can't find breakout buyers? It's going to come back to find out those pullback buyers. All right. That's just, I don't know. That's just, I mean, if there's no volume there, they have to find buyers somewhere else at lower levels and lower prices. So there's no breakout buyers. So what happens is it goes down, down, down. Here you have that 28. That 28 is right against that 55. That 55 was where all that buying occurred. Now what's happening is they're buying more as it is in their area. This buying area, it goes into that area and you have 28. Now don't be confused to say, okay, this is a red brick or whatever, down brick. Doesn't matter. This is buying on the way down, meaning someone is buying, accumulating on the way down. Just like a climax is really accumulation. That's what it is, by the way. Not just a point figure going around, that box. The panic, actually, some climaxes are also accumulation. That's where a lot of it occurs. As you can see right here, for example, the 30, this is all accumulation. This 18, 30, and 18. Anyway, this is all accumulation in that range. Okay, where was I? So over here in the 28 is against this 55. This 55 has the biggest volume in over 100 bricks. You know that there's buying there. As it goes into that area, they buy more. Okay, so this is where they're loading up. This area is where they're loading up. It is against this breakout on the 55 and this breakout right here on the 41. Perfect place to load up. So long story short, it didn't have breakout buyers, so pullback buyers entered. Where did they enter? In the prior area of the breakout. If they're not there in the prior area of the breakout, it's going to go to a lower low, usually at the low of the trend. Not the low of the trend, the pivot, the swing low. In this case, you have the swing low and the breakout together. So, I mean, they're just buying and buying over here, 55, and here, 41. That's 96. And this is 28. So, in that same strong area of buying, you have price that goes there and it just load. And notice this 28 is bigger than 215, 278, 15. What's that mean? That means these are pullback buyers. This is most amount of volume. So they're loading right here. Now, it's very critical because it could have been a breakdown as well, right? But look what happens right after that 28. There's a green break. So if this is a breakdown, why didn't it have follow through? Why did instead it have a reversal? So this is not a breakdown. It's actually a minor climax as the market goes down, a minor climax where pullback buyers are loading up. And then they load. And they load until it finally goes into markup. At this point, when it tests, bang, after that it's all markup, 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 markup. And that's what it's doing right now. All right, so key things to learn is the climax happened on a lower time frame or lower break size right into the low of the rally on the higher time frame, from where buying pressure emerged. What is the evidences that buying pressure emerged? On individual bars have a lot of volume, and the waves themselves have a lot of volume. Like this wave here has more volume than 49 prior up waves. This brick has more volume than at least 100 prior bricks. What's that saying? Buying, 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 buying. It's all buying. Then the next thing to learn here is that against this high, it pierced it. When it pierces it, it means that there's no breakout buyers. The no breakout buyers are not there. They absorbed the breakdown right here and went right above it, pierced it, but they're not there. So if they're not there, what does that mean? It means the market has to go and find buyers. They're not on the breakout, they're going to find them on the pullback. And they do find it on the pullback right here on this 28. And when they find that on the pullback, those buyers this is a little confusing because the buyers are buying on the way down. If this was a green up break, it's more obvious. but instead it's a big red down brick, almost looking like a breakdown of this low, but actually it's buying on the way down. And after that, all of this gets initiated. Why? I mean, the buying is there. When buying is there, that same area where that 7 was, as it goes, now it's 21. That same level. Before it was only 7 because breakout buyers not wanting to commit. But once those breakout buyers see that the pullback buyers are committing by loading up here 28 and 19, then when it goes to that same level of where it says 7, they commit by coming in with this 21. Now they want to commit because they see the pullback buyers are there. They got their back. All right. And now, as the market pulls back here, guess what? More pullback buyers right there in the 23. And market goes higher. All right. That was a case in point of a climax springboard, sign of strength, and buying on the way down when breakouts are not found, breakout buyers are not found. How do you know they're not found? Do not confuse this with an upthrust. It's not an upthrust. It's a probe to go higher, but the breakout buyers were not there, so the pullback buyers stepped in. Then the breakout buyers came in because they were pullback buyers, and it went up into markup. This market is very, very appealing right now, copper. Why do I say that? Because it's been basing out on a daily time frame. So it's definitely a market you want to take a look at. Nobody knows what's going to happen next, but you have clues and you just have to be able to read them. All right, take care. Bye.